Hey guys, it's Tanner Manson from Future Investing, and today I want to talk to you guys about Ark Innovation's top 10 holdings. I saw this funny little tweet talking about the drops from their all-time highs, and I wanted to sort of explain what's happening and maybe give my own opinion on it. Now, just before we get started, although I am actually a licensed financial security advisor as my full-time job, none of these stocks or topics that we talk about today are in any way my recommendation. This is merely my opinion, and you can choose to do what you wish with this information. Now, before we jump into it, if you could, hit the like on the video down below and subscribe if you want to see more content like this. Now let's jump right into it. So a lot of you guys may know that I've been very critical about Cathie Wood in the past. Now, it's not because I don't think she's a great investor or anything along those lines. I do think she's amazing and she's going to be a fund manager and have a very long, successful career. But I hesitate to believe that Cathie Wood is going to return anything like what she did before the pandemic. The problem is that a lot of investors got in, started following Cathie Wood's Ark Investing's different, her different ETFs after, the big gains have been made. But the problems with how ETFs actually work is that she has to allocate that money in some regards. So she's dollar cost averaging Tesla, for example, at way too high of costs, actually bringing down the overall fund's performance now that it's dropping at rapid rates. And also that you start to invest in newer companies, ones that you never probably would have put any money into because they were just subpar to your other more high conviction stocks, but yet you have to invest in those because the amount of capital that's getting rushed to you is just so intense that, you end up not having to perform that same type of, returns that you're used to because you were not following the same principles that you had done before whenever you had less capital. To sum it all up, you are forced to put the money in, maybe investments that you wouldn't have purchased at the time, or in timings that you may not have purchased, like at all-time highs. When people are pouring their money into Ark Invest, she still has to buy Tesla or Square or PayPal or some of these companies that she may not want to buy at that price. She might want to have preferred to have waited for, Tesla whenever it's down at the price before, whenever she was really talking it up, saying it was going to go to $800. But this is another problem, is that she has to continue the hype train to have more and more people come in because that's what pays her, right? And so obviously they've hit the price target for Tesla. So she can't say, the price target for Tesla has been hit, it's going to hold this for 5 years. No. What she goes now is no, the price target's now $3,000 a share. How did it change? Nothing like in terms of Tesla has changed fundamentally in the business. So how can it go from $800 a share to now $3,000? This is one of my bigger concerns about Cathie Wood, is that I don't know if she actually believes in the price targets that she's saying for some of these companies. She might just be saying that so then media is so blown away by her price target that they have to write a blog about her. They have to write a video, or they have to record a video, and just that whole thing about there's no such thing as bad publicity, and she's just throwing out insane price targets that are not validated at all, and I don't even think she believes in it herself. It's almost a little bit of an ethical dilemma. I don't think it's good to hype someone up on a bad investment like that, or maybe not a bad investment, but just it's okay to say that it's going to be a slower return investment at a certain point. A company like Tesla, while gaining a certain amount, if the stock takes off like this, the higher the stock price is, the harder it's going to get to continue to go up, right? You have to get exponentially more and more investors to believe that the higher price of this stock is going to go even further. So how does Cathie Wood do it? Well, she just says some exasperated claim that in a bear case for Tesla, it's a $1,500 stock, which is such craziness. You can honestly write a bear case for Tesla, like a true bear case for Tesla, that it's $100 a share. Now, who knows if that's to come true, but there are cases like this. They need one slip up on their line, or for a factory that's supposed to go out in Germany or another place in India, for them to say, no, you've been outbid, Honda's taking that, something to slow their growth, and the whole sort of growth aspect of the company is shot for the most part, which is normal to happen in equities. I'm not saying that's not supposed to happen. There are supposed to be challenges along the way. But whenever you have a company that's priced at 1,000 times PE ratio, or even before at 1,700 times PE, there cannot be a slip up. There is no room for error. Everything must go perfectly. And even then, it's still going to take you 10 years to get your money back. But I mean, Cathie Wood's no dummy. She knows the markets better than I do, but I just think that she's manipulating a little bit of her price targets to get investors into Ark Invest, which evidently just ends up paying her. Your dollars in Ark Invest are unrealized until you pull it out. Hers are getting paid to her check after check that gets deposited into her bank account for managing that much money. And you really want to strike the iron when it's hot. And I understand what she's doing, because a few years ago, she was managing $40 million, which I have some people in my firm that do that. And they're no Cathie Wood. And now she's managing however some odd dozens of billions, making like 100x, 1000x what she used to make. And yet, you expect her to not manipulate or exaggerate to keep that momentum going, because she's living a lifestyle that she's never lived before. And most times, whenever a mutual fund manager or an ETF, whenever they get so hot that people start to get, big media attention, that most times, 90% of the time, that fund manager actually fails to perform as good as they did back whenever they were, trying to invest small sums of money. Joseph Carlson makes an amazing video called A Warning to Ark Investors. If you haven't seen it already, I really recommend you guys go check it out. It's a very well-educated, research video. He talks about previous fund owners, even Peter Lynch, one of my favorite fund owners, where he talks about, although they were doing massive returns, the average actual investor, because they hadn't gotten in at early stages. Most people are trading sort of in a momentum perspective. And so they jump on, whenever the gains have already been made. And these fund managers are not used to holding up such amounts of capital. So they have to dollar cost average at bad prices. They have to buy things they're not, super into. Their amount of conviction is cut less and less because they have to apply money to some sort of equity. So they go to less and less conviction stocks. And what ends up happening is that the average investor in those stocks buys whenever it's really high, and then there's a slow dip, and then because they don't want to weather the storm, because most people don't know how to manage, their own money whenever it goes up and down like that, so they pull out. And the average investor, even though Peter Lynch has done 30% returns year over year, like one of the best fund managers ever, the average investor had lost 11% during that time. It's easy to have a niche as a small manager, but whenever you have to appeal to the broader market and start managing 100 times, 1,000 times more than what you're used to handling, it gets very difficult, because then you start to realize that you're investing, like the amount of capital that you're investing is directly affecting the market. I think with Cathie Wood, the reason why I really wanted to make this video is that setting price targets so high and making, retail investors sort of believe that this is what's supposed to happen in the markets, and that fundamentals don't really matter, and storytelling stocks are the way of the future, is just a little absurd. Do I believe in 20 years or 10 years or whatever, Tesla will be the biggest car company? Yes. Do I think that between now and then it will have a price drop of close to 80%? Yes. And I've said that back in my old video whenever the price was like $900, and no one would believe that it would go back down to 600 or even into the 500s. Well, look where we are now, and look at the rest of Ark Invest's list of top 10 holdings. There is a real shift from growth to value investing, like I said there would be in my past videos. I'll link to all of these. You guys can check out the channel. I mean, I've said this many times before, and yet it isn't the broader market. Only the major growth companies are dying off, 30, 40% drops, and yet the S&P 500, which is the benchmark, like the golden standard for how you're performing, isn't down at all. There's a 0% drop from their all-time high. How can that be possible? That the stocks that are being publicized and talking about so much on YouTube and places in social media, that they're all dying, but yet, regular companies, the ones that I've been talking about, Enbridge, Suncor, some of these energy companies or just basic companies that are the footprint of America are doing just fine. I don't know, this video is going to be a little bit shorter, but I just wanted to draw attention that, Cathie Wood isn't this godsend of an investor. She's really, really good, but it's whenever you start to set price targets of $3,000 for Tesla, and everyone goes, oh, well, she hit it last time. But what does it mean whenever she sets a price target, but now Tesla is down 30% from that price target, but yet now she's setting it even further? I'd like to know what you guys think. Like, do you guys think that growth is sort of done now and that we're going to be shifting into more of a value investing sort of a strategy like I had proposed, way back in my other videos? Or do you think like that this is just going to be a small dip, it's going to bounce back up, and Tesla's going to be the new biggest company? It's going to be the 5th or 4th biggest company in the stock market. And do you think that's right? Even though the growth for this company may be 10 to 15 years out, do you think it's fine to price it in today, as if nothing bad's going to happen? Which, I mean, I truly, truly believe that if you were to hold Tesla long term, you're never going to lose a dime. It's going to be one of the biggest companies that has the smartest CEO in the world behind it. I do actually believe that. I said the same thing about Amazon, like back in 1999, whenever it was $105, whenever it fell down to $8 a share afterwards, it went from $7 to $106, back down to $8. And it didn't touch $106 again till 2009, 10 years later. I see a very similar picture with Tesla in that regard, where yes, people are seeing the hype way before its true potential, and yes, it will eventually get there. It'll be a huge energy play, huge car company, but until then, they're actually riding on some pretty low profit margins, and their energy business has barely taken off. I think we're honestly 10 years away from being priced at where it should be, and there will be a big drop. We're seeing a big drop currently. I'd rather be in safer, easier return equities and waiting for better prices rather than buying now and just, having FOMO on the idea that Tesla's going to take off even more. I'm not that hungry. But let me know what you guys think down below. I mean, I truly do read like every single comment, and I love to hear what you guys think, even if it's to bash me or whatever. I mean, that's the amazing thing about, living in this society and having YouTube, is that we can have opposite opinions. And if you do put up a good point, I'd love to argue it a little bit in the comments down below. I mean, just fun little banter. Anyway, if you could, like the video if you enjoyed it, and subscribe down below if you want to see more content. But until next time, guys, hope you enjoyed the video, and I'll see you guys next time. Bye for now.